Hey everyone, so today we're going to unpack the latest quarterly results from the IT giant TCS. Now you might have seen the headlines, they looked a little mixed, but the stock actually went up. So what's the deal? How does that happen? Well, let's dig into the numbers and uncover the real story behind it all.
Right? It's a really good question. Because on the surface, things can look, well, kind of confusing. But the market's reaction, the way the stock moved, that tells us there's a much deeper story happening here. So together, we're going to connect the dots and figure out exactly why investors gave TCS a big thumbs up.
Okay, first things first. Let's look at the big numbers, the top-line figures that grab all the headlines. What did the company's revenue actually tell us about how they're doing?
So for its third quarter, TCS brought in revenue of over 67,000 crore rupees. Now that's a steady growth of nearly 5% compared to this time last year. And in today's tech world where spending is a bit cautious, that kind of stability, that's exactly what investors love to see.
So where did that growth actually come from? Well, the heavy lifting was really done by some of the most critical sectors in the economy. We saw really solid demand from banking and financial services, and also from consumer healthcare and manufacturing. These are basically the pillars that powered that big top-line number.
All right, so the revenue story looks pretty solid, but this is where we get to the profit puzzle. And honestly, this is where the headlines started to get a little confusing and maybe even a bit misleading. Yeah, I bet you saw this exact thought floating around online or in the news. And look, you wouldn't be wrong. Technically, the reported profit number did show a dip, but trust me, that is not the whole story.
Okay, this slide right here clears up all that confusion. On the left, you've got the reported profit, the one that fell. But that number includes what are called exceptional items. One-time costs like a legal settlement, stuff that doesn't really reflect the day-to-day health of the business. But once you strip those out, you get the adjusted profit on the right, which actually grew by a very healthy 8.5%. And that tells us the core business is performing really strongly. So, to really get a handle on the company's health, we have to look past those surface-level numbers. We've got to dig into the metrics that show the real underlying performance. Let's start with a really important term, constant currency growth. For a huge global company like TCS, currency values are swinging around all the time. What this metric does is it just strips away all that noise. It lets you see if growth is happening because more customers are actually buying their services, which, of course, is the real measure of demand. And here's the proof in the pudding. TCS reported 0.8% growth in constant currency terms just from the last quarter. Now, I know that might not sound like some huge, flashy number, but it is incredibly significant. It proves that the growth wasn't just some illusion caused by currency swings, it came from genuine, real business demand. And what does a company with that kind of strong, real performance do? Well, it rewards its shareholders. TCS announced a total dividend of 57 rupees per share. And get this, that includes a very generous special dividend. This is just a massive signal of confidence from management about the company's financial health and its cash flow. So we've established the company is stable and it's rewarding its shareholders today. But the market is always looking to the future. And these results gave us a really exciting peek into where that next big wave of growth is coming from. And you guessed it, artificial intelligence. This might have been the biggest highlight of the entire quarter. TCS revealed that its AI services business is already bringing in revenue at a rate of $1.8 billion a year. This isn't some far-off dream. This is a massive money-making business for them right here, right now. And just look at the speed of that growth. The AI business grew by more than 17% compared to just the last quarter. And what's really smart is that TCS isn't just selling AI as some separate thing. Now, they're weaving it into everything. Cloud, data, cybersecurity, which just makes all of their core services that much more valuable. And on top of all of that, the company signed large deals worth a whopping $9.3 billion. This is so crucial because it gives them a really clear pipeline for future revenue, and it just shows that their biggest clients have a ton of confidence in TCS to deliver on these huge projects. Okay, so let's pull all these different threads together and finally answer our original question. Why, despite all those mixed headlines, did the market react so positively to TCS's results? This one phrase I saw from analysts really sums it all up perfectly. The performance wasn't about jaw-dropping, flashy numbers. No, it was about something the market values even more, especially in uncertain times: reliability. So when you connect all the dots, the picture becomes crystal clear. Investors, they looked right past the headline noise, and what they saw was a company delivering steady, predictable growth. They saw strong core profits, a clear and super fast-growing strategy in AI, and big deal wins that basically secure revenue for the future. You put that all together, and that's the recipe for why the market cheered.
And that kind of leaves us with one final thought to chew on. In a world with so much economic uncertainty, a world of cautious spending, have we reached a point where dependable, steady execution is actually more attractive to investors than risky, high-flying growth? In other words, is reliable the new flashy? Something to think about. Thanks for joining.